Econ 101 doesn't matter anymore. And it reminds me, by the way, of what my former boss, David Einhorn at Greenlight, used to say, which was the jelly donut hypothesis. One jelly donut, like the first rate cut or the first 100 billion in QE, is a tasty snack. Second, tastes good, not as good. Third, fourth, and fifth, stomach ache. Sixth, seventh, and eighth, I know it's not politically correct, but eating disorder, right? And so just because you're doing rate cuts in QE, that doesn't portend economic strength. In fact, we saw 7 years of zero rates and the weakest post-World War II recovery in the U.S. economy. And just because you see rate hikes, despite all the fancy textbooks and jargon, doesn't necessarily mean you see economic weakness.
Futures Edge podcast. I'm Jim Murio. As always, the brains behind the operation, Bob Iacchino. And we have a special guest today, James Fishback, the CIO of Azoria Partners and the chairman of Incubate Debate or the president of Incubate Debate. Which position is correct? Either one doesn't matter, right?
Well, president's too democratic, chairman is too communist. It's just executive director and founder. Chairman Xi, that I don't want to be in the same club as Chairman Xi.
I like you already. We have a lot to talk about because the thing I'm excited about is we can go in a couple different directions. We can go very macro, which we like to do. We can go you introduced us to Brianna Watley, who we fell in love with. She was fantastic. She's from your Incubate Debate, and she crushed it. She was a voice that people were trying to silence, and she was not taking that sitting down. But thank you so much for having us. Where are you located? New York?
I live in Madison, Florida, which is a small rural town about 50 miles east of the state capital of Tallahassee. I'm in New York right now at a Holiday Inn Express. Based in Florida full time.
So are you from that small town of Florida? Did you move there?
No, I moved there recently, and Incubate brought me to there just because it was a beautiful town, but also because I needed to travel all over the state for the work that we do with middle and high school students. But I grew up in South Florida in Fort Lauderdale.
Oh, fantastic. That's excellent. Okay, so today we are recording on Tuesday, December 12th, and we just saw today's CPI number. So let's have a breakdown of that before we go any further. It came out pretty much as expected, maybe a hair higher than expected. Risk assets seem to like it. What's your thoughts on it?
Well, my thought is that the way to think about inflation at this point is, we've come a long way from where we were in the summer of 2022. The big question, though, is where are we going to be next summer? Everyone seems to present this as a choice between soft landing, hard landing. There's actually a third choice, Jim, and that is no landing. And so it's, everyone takes what the front end prices as gospel, right? Earlier this year, the market was saying in the throes of the SVB collapse, they were saying there was going to be 100 basis points. Those were some really tough days for people like you and me in this business. That there was going to be 100 basis points of rate cuts by this time in the year. They were saying that in March. Of course, that didn't happen. What happened was 75 basis points of rate hikes. That's an unbelievable delta between what the market was priced and what was actually delivered. And so I'm more concerned, more just curious about where inflation ends up 6 months from now. I'm in the no landing camp, which is the world is not going to look all that different from what it looks like today. Labor market that keeps hanging in, inflation that kind of stalls around here, recognizing that, look, the goods disinflation is what has been driving the headline number, even the core number lower. And it's services that are being persistent, that are actually being a lot stickier than most people appreciate. And to square that with the idea that the market is pricing 100 basis points of easing next year doesn't make a whole lot of sense. But I'm reminded, of course, of that John Maynard Keynes quote that the market can stay irrational longer than you can stay solvent. That has been true several times this year with the front end.
Okay, so I'm nervous because I just listened to a podcast with our good friend Jim Bianco, who says a lot of similar things to what you just said, except that he also thinks that we could have a resurgence of inflation. I'm skeptical about that. Do you think there could be a resurgence of inflation or no?
I think it's possible. I think it's not my base case, but I don't think that you need to have a resurgence of inflation to get a meaningful sell-off in the bond market, because the bond market has priced so much so fast. We went from 5% on the 10-year when the Fed was talking about, hey, we're going to let the 10-year do the work for us so we don't need to hike anymore. And now the 10-year is at 4.2%. And so there's been a lot priced in. it's not necessarily about one view or the other. It's always, what is your view vis-a-vis what the market is priced? So I have a lot of respect for Jim Bianco. I've never met him personally, but I've been admiring him from afar. And I think there's a place for that argument that inflation could resurge. But what I would say is that if you actually do get the Fed throwing in the towel and cutting in the early part of next year, that goes from being not my base case to being very much the base case, where you re-trigger a lot of those inflationary pressures. That could be done for political reasons, by the way, to kind of juice up the markets and the economy leading up to the 24 election.
I want to throw something at you that I've been sort of a working theory here, and I see a lot of weakness in the labor market. I really do. Now that's relative to where it's been. People have been talking about the labor market's still robust, it's still strong. We all saw that unemployment figure, that unemployment rate stay pretty damn low. I was looking at some research. The median revision, going back to about 1965, of non-farm payrolls is actually 199,000 jobs in revisions. Okay. And the revisions tend to track the trend of jobs added. So what do I mean by that? If jobs are currently on a downtrend, which we clearly are, we're still adding jobs. What was it, 130 on the last one? 150?
199.
All right, so 199. The trend is down from the 300s, the 200s into the 100s, right? And jobs added.
Right.
And we've all seen that over the last, I think it's about 8 readings of non-farm payrolls number. The next month, things are revised lower. So if you look at the median revision being 199,000, you could theoretically get a revision to 0. Now, I'm not saying that's what's going to happen. But I'm saying clearly to me, fewer people are being hired than they were 18 months ago.
Bobby, are you saying the job numbers are bullshit before James answers, or no? Is that what you're saying?
So I don't like to say that because, and I'm going to go to CPI with that as well, right? I don't like to say that for this reason. We all have to look at the same numbers. And the Fed will use the numbers that are being released as their reason for doing whatever the fuck they're going to do, right? So whether they're BS or not, they're going to cite the numbers. But I saw a CPI today where core is at 4% year over year. And I find it strange that the Fed is going to look at a 4% core in December, right? Well, it's November's reading, but we're getting into December and say, okay, by March, we'll probably be at 2% so we can start cutting rates. Am I crazy on that? Or does the actual Fed, like the CME Fed watch tool, need to adjust? Is that what you're saying?
Well, I think that the CME Fed watch tool, as you know, Bobby and Jim, is of course just a reflection of what is priced into this market. This market, despite being full of a lot of interesting and smart people, is still susceptible to the same euphoria, greed, and panic and volatility that the stock market is. The same stock market that said that the used car vending machine was worth $80 billion 2 years ago. The same stock market that has time and again gotten these valuation pictures wrong. I look back at this, I've been doing this for about 8 years, but I've looked just back at history in the post 08 period. The market we took rates down to 0% in December of 08. We didn't end up raising them until December of 15. And yet there was this perennial slope to what the Fed funds or the Eurodollar market was pricing in terms of hike. And one of the best trades, Jim, on a risk adjusted basis was just being long that Eurodollar strip, as the market never actually took those hikes in and the Fed never hiked. And so this is a really good trade. Now, the same thing happened, by the way, the other way around in 2020, 2021. The market assumed that the Fed was going to be at 0 for years to come because in part the Fed had told them they were going to be at 0 for years to come. We saw this in the mid-cycle adjustment. We saw this earlier this year. This market, just if some of the people are more interesting and just happen to live in Chicago as opposed to New York, they're still subject to the same types of biases and all of the same risks that folks in the equity market are. So I'm just not a big believer that we should be taking this stuff as gospel. We've seen it time and again this year. The interest rate futures market has gotten the Fed wrong. To your point about the data, there's no question that there are serious concerns about the data. I don't think that the job market in particular, I don't share your concerns in large part because we have a household survey. We have a number of anecdotal information. We have corporate transcripts as well that confirm that hiring is there. I also think that as a natural reality, as the job market moves closer to full employment, 3.7, hard to argue you're not there in some sense, that we are going to reduce the number of jobs added each month. What nobody seems to talk about when it turns out to be a positive is household survey. We heard about the household survey from the October number because it was negative versus the non-farm payrolls number. The household survey, Bobby, was 790,000 jobs last month. And so we're getting multiple dimensions of confirmation. I'm seeing it as I travel my state of Florida in urban and rural communities that hiring is still there. And in many cases, there's still demand for workers. And I think that we got to take the Fed at its word. I agree with you, by the way. Core CPI at 4% and a market that as recently as last Thursday was saying there was a 70% chance of a rate hike at the March meeting. To that, I say put down Hunter Biden's crack pipe because that doesn't make any sense.
You said hike, you meant to say ease, but yes, right.
Yes,
but
ease,
so
yeah.
to that point, right? If the trend I'm seeing is not a trend, okay, I'm seeing it in my head. I do have a lot of hallucinations because of my coffee intake. But if the trend I'm seeing is not the actual trend, how do you get to inflation when you're looking at 60% service-driven economy, somewhere in the range of 7 to 9% wage growth, and people are still finding jobs? How do you get inflation down?
It's actually really tough because most of the disinflation, the move that we've had over the last year has been driven by the goods sector, right? The goods sector has usually been -1, -1.5% for the past 10, 15 years. It's a result of globalization, importing all that stuff from China and so on. That stuff went really positive. And so that pushed headline inflation up, but that can't go down 10% again, right? Used cars can't collapse another 25, 30, 40%. And so
not with the jobs figure, right?
Of course not. And so what the problem here is that to get inflation meaningfully lower from here, you actually have to have the services side of the economy cooperate. And this number that we got today actually confirms the opposite. There are signs of reacceleration on the services side. And make no mistake, the labor market is portending more services strength. Look at Black Friday, by the way, the Stripe numbers, the Adobe Analytics numbers. I was at an outlet mall in Florida and it was shop until you drop. And so the reality of the situation is the consumer is strong. We can talk about the reasons for that. A lot of it has to do with the fiscal largesse, right? The Biden bucks and the Kamala coins, and even the Donald dollars in the early part of the pandemic, although I believe what happened with the CARES Act under President Trump was justified. Did you make those up
on the spot, or did you have that in your pocket already?
I had 2 out of 3 in my pocket, but I made up one on the spot. It's a natural alliteration, Jim. You got to have a little bit, but you have to be. You can't be irregular. You got to be spontaneous. And so consumers in a good spot. Consumer is 70% of the economy. So if you're making a case for recession, don't talk about CRE. Don't talk about venture capital. Don't you dare talk about San Francisco real estate market. If you're making a case for recession, tell me why the consumer who has punched above his or her weight for the past 3 years, defied all the odds, why the consumer falls out of the bed in the next 6 months. If you can't do that, I'm not saying you, I'm just saying to the bears out there. If you can't do that, then you do not have a case for recession near term.
By the way, my base case has been that this was kind of a last hurrah and there was going to be a hangover in the first quarter. But again, I don't like disagreeing with guys like Jim Bianco and guys like you. I want to ask you about the trade I have on because I think there's 2 scenarios that it works. I am long a steepener, which Bobby and I always argue that when you're inverted, it's not really a steepener, it's just flattening back to zero, but that's semantics. Okay. But my theory on the trade is one of 2 things. My base case when it started was that burning timbers are going to be falling from the sky in Q1, and they're going to drop short-term rates lower. But I'm also thinking that if that doesn't happen with a -50 in 2s versus 10s right now, not today's auction, but the last 2 auctions went poorly. She doesn't like to auction off duration because she's afraid of stomping the bond market and driving those rates higher. But if we start to adopt a higher for longer thing and that gathers steam, perhaps 10-year yields start to go back up again. Do you like a steepener or not?
I do like it in theory. The steepener is always tough because you have 2 separate trades on, right? You're long the front end, you're short the back end. I have sort of a really big problem being long the front end with how much is priced into the curve right now, right? 100 basis points, give or take, to the end of 2024. So you have a negative carry dynamic, right? So you're offsetting a little bit about at the back end, but at the end of the day, all else equal in 6 months, you'll lose money if nothing changes. What I try to do, and I did this at Greenlight Capital for 3 years where I worked under David Einhorn running macro. I'm doing it now with Azoria Partners, is I look for trades that on one hand do well in the widest range of outcomes, and on the other hand, also carry positively. So I'm with you 100% on the theory. I think we just differ a little bit on the structuring implementation.
So let's talk about what somebody's theory for a recession might be. Sure. Okay, so obviously the trigger of the inverted yield curve, right? You're saying Similar to what you said probably earlier, right? It can stay inverted longer than you can stay liquid. I'm guessing that fits here.
That
Tell me
does.
where I'm wrong. And the second part being consumer credit, not at risky levels the way I read it, but certainly going up. You saw the buy now, pay later numbers in the Black Friday, 72% increase from last year. If I were to pick out something, and I'm not picking it out, by the way, I don't really have a dog in that. If I were to pick something out that could stall the consumer, certainly not implode them, I would say that they think they're rich because they got raises that caught them up a little bit to the inflation we've just gone through. And then after that, if we could, let's talk about inflation a little bit, but a little bit more. But they're going to be paying their credit card bills come January and February, including the buy now, pay later. And the vast majority of them will be at higher rates. Do you think that slows it enough to make it kind of look like an implosion or no?
No, I don't think so. And what you're talking about 100% makes sense on paper with
Mm-hmm.
one key assumption that these represent equal parts of the economy, right? So
Mm-hmm.
the largest liability for households is mortgages. It's not even close. It's about 80% of the
Right.
liability side of the balance sheet. Consumer, credit cards, for example, yes, those rates have gone up, but the average American has a rolling credit card balance of about $1,500. In fact, about 30% of them actually pay down the balance every single month. The emergence of buy now, pay later is remarkable because it shifted the economic model from making money off of the borrower to making money off of the merchant. And it's
Mm-hmm.
unbelievable what's happening there. It's really something. The idea that you could extend someone a 90-day line of credit, no interest, charge Target or Apple for connecting the two, and it extends buying power. So I'm just not
Yeah,
seeing
yeah,
that.
yeah.
In fact, what I'm seeing is the other side, which is the idea that higher rates in many ways, Bobby, are benefiting US consumers and businesses. Let me just explain. You think of any balance sheet, you got liabilities, you got assets. Well, in the US, businesses, and this is not the case in Europe, businesses and households have fixed liabilities and floating assets in large part. And let's talk about how that works. 30-year fixed rate mortgage, that's not a thing in the UK. It's not a thing in Germany. It's sure as heck not a thing in Brazil. And so when you had 14 million refinancings in 2020 and 2021, when you had people pulling in home purchases into that short period, taking advantage of zero rates and QE, that what ended up happening was they locked into low rates, and that excess cash they had left over, they were able to invest that. And they're now earning 4 to 5 to 6% on excess cash. Look at businesses, by the way. They termed out their debt. They termed out their debt in 2020 and 2021. So what do they have left? Well, that side is locked in. So if rates go to heck 20%, they're all set. But if rates go higher, they'll actually make money on the balance sheet. Here's a way to think about it, by the way. Bureau of Economic Analysis, they took all the non-financial corporate net interest payments in the economy, Jim. Over the past year, net interest payments have gone down 20%. Rates have gone up, and the net interest payments of companies have gone down. Why? Because their rates were locked in on the liability side, and now they got 100 million, 100 billion, whatever in cash that's earning 5%. We're seeing similar with households as well. And so it's totally counterintuitive. It's really paradoxical. I have a funny name for it, what I can tell you about in a second. But that is the state of the economy. Econ 101 doesn't matter anymore. And it reminds me, by the way, of what my former boss, David Einhorn at Greenlight, used to say, which was the jelly donut hypothesis. One jelly donut, like the first rate cut or the first 100 billion in QE, is a tasty snack. Second, tastes good, not as good. Third, fourth, and fifth, stomach ache. Sixth, seventh, and eighth, I know it's not politically correct, but eating disorder, right? And so just because you're doing rate cuts in QE, that doesn't portend economic strength. In fact, we saw 7 years of zero rates and the weakest post-World War II recovery in the U.S. economy. And just because you see rate hikes, despite all the fancy textbooks and jargon, doesn't necessarily mean you see economic weakness. I was speaking at an institutional investor conference 2 weeks ago, and I asked the crowd of what well-known buy-side portfolio managers, heads of trading, and I asked, let's just be honest. Who thought if I told you in March of 2022 the Fed was going to take rates to 5.25% and unemployment would be below 4%? Not a single hand was raised. I thank them for being honest. But the reality is, guys, is that this economy has defied all the odds in large part because it's so profoundly different. It's so profoundly paradoxical that in many ways, higher rates are actually helping growth in the consumer businesses.
So what I think, to put a fine point on what you're saying, is that, so we did a thing of this on one of our previous shows. In 2019, 1% of the mortgages out there had rates lower than 3%. By 2022, that number had grown to like 30%. The effective rate of mortgages right now is like 3.8%, not the 7.5% too. So the people, everyone who had the chance, rolled into duration. So now they're in duration and they're looking back and saying, okay, you need to borrow money, sucks to be you. I'm fine. I got a 30-year loan. Now at the same time, all the money that people had on cash, we used to call it money on the sidelines, and it was going to be fuel for the next risk asset run. Well, that money's now earning 5.5% in 3-month bills. It's not itching to go anywhere. That's kind of what you said, right?
That's exactly right. He's out of scene, but my co-CIO and managing partner at Azoria, Asaf, he and I were just talking about this the other day, which is, 5 years ago when we had a high school or a college friend reach out for investing advice, they wanted to know how to buy NFTs and crypto. And now when somebody reaches out, they want to know how to buy treasuries. Actually, go to the Internet Archive, the Wayback Machine. Go to the Robinhood front page from January 2021, and it's all about how to buy NFTs. Look at the Robinhood front page today. How do you buy 3-month and 6-month bills? And
I want to make a confession to you guys. I've been a rate trader in futures my whole life. I had never actually bought a bond until about a year ago, and I had to Google it. How do you actually buy a bond?
How do you do it, right?
Anyway, yes.
Yeah, and it's a great alternative. And by the way, that happened at the exact same time that we massively increased household net worth. Household net worth has never been higher than it is. The consumer's in a really strong spot. They talk about excess savings being drawn down. That's excess savings. That's not total savings. Excess savings was in excess of what the projected path would have been prior to the pandemic, and you carried that through. And so for me, it's just about looking at the actual facts. And I think it's really easy, to your point, Jim, about the average effective mortgage is actually 3.8%, as opposed to all of the headlines who are trying to get us up in arms and rioting in the street over 8% mortgages. The reality of the situation is a fixed rate mortgage is a fixed rate mortgage. And yet you have people rolling over 3-month, 6-month bills. The Fed hiked 75 basis points 4 times last year. And then every 3 months, you were just locking into a subsequently higher and higher rate. And that gave you purchasing power. That gave you the ability to support the economy. One person's spending is another person's income is another person's spending, and so on. And that's what we're seeing. I have a really hard time seeing what breaks this, because we're in a really good spot right now.
So let me ask you something then. And I want to talk specifically about CPI and data being bullshit, because I think it's an important subject that people skim over. But you might reach through the screen and punch me in the face for this, but it sounds like you agree with Biden when he says that he's trying not to punch me. You see that? When he says that, people are saying that they're not doing good because inflation's too high. You make more money now. You're okay. I mean, is that sort of what you're saying?
I'm not saying that. And
I didn't think you were, by the way. I'm just kind of poking the bear a little bit there.
Yeah. Look, there's a really tough thing that's going on right now.
Mm-hmm.
Our nation's well-being, our economic health is not going to be judged by a bunch of government-produced statistics. It's judged by the lifeblood, the pulses of the American people, hardworking men and women in agriculture who drive buses, who drive trucks, who are police officers, who are nurses, who are working in the services in the goods sector. And they're upset. They're frustrated. And the reality of the situation is that 2 things can be true. That you can be spending, and yet deeply concerned about the trajectory that we're on. I was at a dry cleaners where I live in Madison, and there was an elderly Black woman who was staring at the screen. They were talking about some recent economic reports. And this is a woman who later confessed to me she is a lifelong Democrat. And she said, I just want President Trump back. And so there's something going on in this country where people actually looked at the common sense policies of that administration, now regret the decisions that they made, and saying we need common sense to be common again. I don't think you can just look at, well, since a lot of people were buying useless, materialist things on Black Friday, that we're better off as a country. That's true in a sense, because Obviously, it fuels businesses, it fuels profits. We can talk about the reaction function for the Fed and whether you want to sell March 24 SOFR. But at the end of the day, what I care about too is, do people feel comfortable with their lives? It's hard to feel that way when you have 10,000 illegal immigrants crossing that border, coming into our cities, going into Chicago, kicking folks out of South Shore High School, which I toured with Vivek Ramaswamy when he was the first and only Republican presidential candidate to visit that community, where you're seeing people, fourth and fifth generation families on the south side of Chicago who have voted Democrat for their entire life saying, what about us? Why do people who bum rushed the border 24 hours ago, why do they get $7,000 a month in benefits? Why do the people who are, in many cases, good people who come to New York get $600 a night hotels when you fired me from my job for not taking an experimental shot? And so two things can be true. You are spending, but you're not content with the country. You're not content with the 200 Americans, many of whom you're deeply connected with, who are dying from overdoses like fentanyl that's coming across that porous southern border every day. The 895 Americans, by the way, who are dying deaths of despair. That's suicide, alcoholism, and overdose. And so again, two things can be true. It's not one or the other, but it does give some pretty tough questions about the direction of the country.
By the way, I made a mistake that I tried to avoid, at least in public conversations. I called him Biden, and I want to call him President Biden because I don't want to disrespect the office, as so many people on the other side did when they would just reference Trump. So I want to correct myself on that. I'm talking about President Biden. But I don't know if you know who Steph Pomboy is, James. She has been on our podcast before. She is the macro maven. She's a brilliant, brilliant person. And I want to put up one of her tweets on the screen real quick. Yeah. So here, this is some of the thing that gets people to say there's just no way the data is real, and brings me to my point about President Biden saying you're fine and consumers saying we're actually not. And obviously you're looking at lower end consumers who are saying that. But she said two quick points on CPI.
Health insurance.
Yeah. Less that were needed here is evidence that the number's total BS. Imagine how much higher the upside surprise would have been were this component rooted in reality. And what she has there is U.S. consumer price for health insurance in November. And essentially, it looks like on a year over year basis, this thing has been dropping like a rock. Healthcare prices, insurance has been dropping like a stone. Right. How is it possible for people to actually believe anything that comes out of government when you see something like this in a government table, James?
Yeah, so this is a really interesting point here. What I would note about the CPI index in healthcare is that there was recently a data change, which, agree or disagree, actually foreshadowed this, and so they've actually been pretty transparent. Again, historically not very transparent, but in this particular case, this is about a changing of what data is used and how it's calculated. Of course, if you ask any American, are healthcare costs down 30% year over year? Absolutely not. But I think it speaks less to this particular manipulation and more to just how fundamentally disconnected these government produced stats are from the experiences of Americans. But yes, I have seen this, and it's really because of a data change in methodology.
But it is really funny that they changed the data, yet the Fed goes, no, we're still going for 2%. Even though the way of calculating it, and in fairness, they look at the PCE more than CPI by their own words, but they say, no, we're going for 2%. It doesn't matter that they started calculating it in a different way that pushes the actual number that we watch lower. So
that's right.
It's very hard to believe that the intentions are anything but manipulative and nefarious when you see things like this.
It's hard to believe, in large part because most of the things that the government does is manipulative and nefarious. And so I think about that Reagan quote, right? I'm here from the government and I'm here to help. Yeah, it's time to lock your door and grab your gun. At the end of the day, I think the big thing is we have to separate, what we think about the Fed. And I have personal views about the Fed. We could chat about this for hours, and I'd love to hear yours as well. And then there's the reality of us as market participants, as investors. We kind of have to buy into this scam just a little bit, right? Because everyone else buys into it. And so if you take the random
data, right?
Exactly. And so I let's put it this way. I like Ron Paul for president. I don't like Ron Paul for macro hedge fund PM. Right. And so I've got to balance those two. I'm very politically active. I'm very mindful of what the Fed represents. And I think it's actually a net harm to society in so many ways. But also it's my job to deliver returns for investors and support them and their families.
Jimmy, do you want to give James our opinion of the Fed in the shortest possible way?
Yes, well, we've argued. He says he's tired of bashing the Fed. I'm just getting started. When I think the Fed came out and said inflation is transitory, what they really meant is we are worried that inflation might be transitory, and we're going to do whatever we can on God's green earth to make sure it's not transitory, because we have to bail out particularly these 5 profligate states who cannot possibly pay their debt, pay their pension obligations, unless we have rampant inflation. Then I want to move this towards some risk assets you said about investing money. But do you agree with my thesis about the goddamn inflationary thing?
I think that part of it is it's become so systemic that inflation at certain times has to be dealt with differently. And so, yeah, that's kind of the big lie that everybody's in on, right? Is that inflation can help inflate away our problems. I don't know that they were necessarily cognizant of that when it happened. Here's what we do know, that headline CPI hit 5% in June 2021. And the Fed didn't hike rates until March of 2022. And so whether it was just sheer incompetence or something greater, I think the end result is the same. Millions of American families were hurt. Businesses, the certainty, the predictability of what it means to do business in this country was tarnished. And that hurt a lot of people in the process. So I'd love to think about exactly what was in their thinking and what drove them to this. But at the end of the day, the end result was the same. And it was a massive, massive loss for American families and small businesses.
Unbelievable. So now let's talk. You talked about some people being flush with cash, meaning there's, still of the COVID money that was pushed in, whether we want to call them Biden bucks or Kamala coins, which I love that, by the way. A ton of money was pushed into the system. A ton of money remains in the system. Is that a bull case for risk assets for you through 2024?
The right risk assets, yeah. The right risk assets, yes. I believe. I also think that a lot of those companies are well positioned to take advantage of emergent technologies like generative AI. It's going to change everything right here, right now. This is not 3 years from now, like the Bitcoin chucksters who are trying to sell us. Well, it's not here today, but it's going to be here in 36 months from now. But I can take my phone out right now, Jim. I can scrabble on a napkin of a design of a web application. I can take a picture of it, give it to ChatGPT. It will write the code for that website. It will write right now. And so here's how we're thinking about this at Azori in terms of generative AI and really the economic impacts, not about any individual stock, but the wider economic impacts. If you assume ChatGPT-4, which is the latest publicly available model from OpenAI, if you believe that that is the ceiling, that if we get not one iota of incremental technological progress above GPT-4 model, it changes everything. It changes the world 10 times over. 10 times over. And that's the technology today. And you just extrapolate that out, right? And so that is a really powerful technology. It's sort of sad that a lot of the same people who pushed the crypto hoax for so many years are now behind the AI, which is a real fundamental story. And so I think the message and the messenger are being confused. But this technology, you can feel it, you can see it. You don't have to devise some esoteric use case. It's real, it's here, it's now. And that's the exact opposite of what crypto was. And there's obviously, we can talk about some of the benefits of that, so on and so forth. I'm not anti-crypto. I'm talking about it purely as an investment and the use cases. And so I think AI changes everything. And I think you couple that with cash reserves. I think you couple that with the fact that we're going to be higher for longer, and the types of companies that are going to be able to benefit from AI are the ones that have actually termed out debt in the first place and are well insulated from a higher rate environment. I feel bad for those Russell 2000 companies who have floating rate debt. They're going to have to roll over at higher rates over here in the next year or two. But yeah, the companies that are the best positioned are termed out on debt, and they can take advantage of this technology and deploy it pretty effortlessly.
Okay, so that brings in, which I think is the natural next question. I gave a speech recently in Miami, and they wanted a macroeconomic view. And part of what I was talking about, I was comparing our current situation to what we experienced in the late 70s and early 80s. And everyone wants to give the credit to Paul Volcker, who slayed inflation like the dragon. I argued, and I still argue, that the rapid increase of technological uptake with the internet was highly deflationary, and that extended for the next 20 years. Is AI a powerful disinflationary, deflationary, whatever you want to call it, tool that will just create so much productivity going forward that'll be a constant pounding on inflation?
Yes, it will be. It will be. And it will be massively profitable for companies. Look, Elon Musk acquired Twitter, fired 75% of the staff, and everything is humming along just fine. What AI is going to enable, it's going to enable several types of businesses to cut, in many cases, 30, 40, 50, I don't think 75%, because Twitter was full of a lot of woke DEI people who were trying to censor political
You
candidates
don't
and
say. Okay.
honest debate about the
It's just a
pandemic.
theory, James. Except we saw the goddamn emails, but whatever. Yeah.
Exactly. And so you actually have companies out there that can cut labor by 30%, boost profits obviously. So it benefits both top line and bottom line, because top line, you actually can drive new revenue sources through AI, can go out there and find new clients and customers and personalize and interact with them. And then at the same time, you're cutting human costs. You're taking labor, bringing it to software. It's not going to unionize. You don't have to force a vaccine on it. Right. And so all of that is accretive. It is massively, massively beneficial to companies' bottom lines and top lines in some cases. And so that's not necessarily a 6-month view. That's a 5 to 10 year view. And it really does benefit a lot of the incumbents in this space, specifically the large tech companies who are well positioned to take advantage of this technology, to train this technology. Microsoft, for example, 300 million enterprise users globally. They're already bringing the OpenAI models into their software. But I think it's going to be really, really interesting if all of a sudden everyone can have a personal shopping assistant at Nordstrom. And that thing can come to you and say on a rainy day or in cold weather, right? And prompt you and do all sorts of fascinating things. So again, we're going to unfortunately fire that personal stylist. And we're also going to bring in a 24-hour personal stylist as just one example, right? One use case that both drives revenue, cut costs. You couldn't ask for a better way to boost profits. And of course, that manifests itself in higher stock prices.
So, James, it's a really strange world. And I mean, I 100% agree with your thesis on what AI is going to do. I remember we had Luke Groman on, not this past time, but the time before that. And he was fond of saying that nothing could save this economy long-term short of a productivity miracle. And it feels like you're describing one in a way. So
in a way,
then I take us to the Scott Santerns conversation, who wrote a book on UBI, Universal Basic Income. And it makes me wonder where your stance is on that, because one of the things that's really hard to see from this point of view, the internet fostered in new jobs, right? It destroyed old jobs, similar to the Industrial Revolution, destroyed old jobs, fostered in new ones. It's difficult for me to see where AI can't just eliminate a huge percentage of jobs. Like my brother-in-law owns a barbershop. He's very fond of saying, yeah, let AI cut your hair. It's not going to happen.
Yeah.
Right. So I look at it from that perspective. Is there going to be new jobs created through AI and we just aren't able to see what they are?
Yes, there will be new jobs created through AI, but no, they're not going to go to the people who were disaffected and unemployed by the AI boom. The reality is there's jobs that are available for them. Plumber, electrician, truck driver.
That's perfectly what I was going to say.
It's a very sort of Schadenfreude, a sweet revenge that the very people who look down on blue collar workers in this country, the investment bankers, the management consultants, the so-called smart people, that they're going to be the ones who are going to get the boot first, because their memos are obsolete. Their PowerPoint decks are no longer needed. Their feedback is unwanted. And so that is what AI comes for first. Yeah, I mean, eventually I think there's going to be some hair cutting robot, but that's not where the low-hanging fruit is. The low-hanging fruit is the research analyst at the desk at Goldman Sachs who needs to go back and pull Fed statements that an AI can do 24 hours a day, interact with you in a number of mediums, voice, text, whatever. That is way more powerful. And so if I were talking to young people, and I do oftentimes, of course, with Incubate, I talk about how do you insulate yourself from the coming structural changes to the economy. You have to get a job where you actually can use your hands and where you can't be replaced by technology, or you have to be really, really good at that thing in the services space. And so, look, there are some jobs where, low-income workers are at a disadvantage. If you're working the McDonald's drive-through, the voice technology today, Wendy's is implementing this technology at select locations. McDonald's is too. This voice technology is unbelievable. It hesitates. It intentionally stutters sometimes. It'll speed up to replicate an authentic human speech. But the moral of the story is, those jobs are available. The question is whether the gender studies majors are going to want to take them. Heck no to UBI. Heck no to student loan forgiveness. You took the loan. You took the loss. Now accept it and don't make the rest of us pay for your bad decisions. If Jim or I go on a margin call because of a bad decision, we don't ask them to bail us out. We have to accept responsibility in the same way that when my dad was a tree trimmer for 20 years, if his truck broke down, he wasn't expecting President Biden to hand him a check, a bailout. Yet all of a sudden, if a them from Sarah Lawrence is faced with debt from a bad decision that they made, all of a sudden it's a national emergency that requires immediate action. So heck no to those policies. Let capitalism, let the free market, let creative destruction work itself out, and let them go to job, let them retrain, let them go to vocational and technical school. Lord knows our economy needs more frontline medical service workers. We need more in nursing homes as baby boomers age. We need more people to take advantage of our electricity grid as we transit to electric vehicle technology. There are jobs out there, but the reality is we can't just be the safety net, which becomes the safety couch, which becomes the safety jacuzzi. We actually have to light a fire, incentivize work and the dignity that comes with it, and let people find their own way.
Jimmy, what did Luke say about plumbers over managing director at Goldman Sachs?
He said plumbers were going to eventually make more than partners at Goldman Sachs.
Yeah.
And by the way, I will add on that too. And I own a bar in Palatine, an old school sort of pub. And just about every day at about 5, all the contractors come in. They have their beer after work. They have a shit ton of money. The fact that we made it seem like, and I'm talking about a whole generation, that we were somehow better than them because we were sitting at a desk pushing paper around was absolutely wrong. I don't have sons. I have daughters. If I had, well, even with daughters again, my daughters are doing fine, but I would be this close to pushing them to be an electrician, a plumber. Those are the things that the society, I'm not even just saying you can make money there. I'm saying this whole notion that we looked at them somehow like they were below us was the biggest amount of bullshit I've ever seen. And we did this for 40 years, right?
Yeah. That's right. The same people that, Hillary Clinton mocked, the Walmart deplorables, the smelly Walmart shoppers, right? That the FBI mocked. Those are the people that are, funny enough, going to be the best protected from the coming technological paradigm shift. And so good for them. And the reality is the rest of them. And by the way, I think there was an excellent Warren Buffett quote. And we would talk to kids about how do you think about investing? Find 2 people in your life, right? Who would you want to be long? Whose income would you want 10% of? And whose income would you not want 10% of? And that's how you maybe should think about what AI is going to do. If you told me right now, do you want 10% of a plumber's income for the next decade, or do you want 10% of some Goldman Sachs associates income for the next decade? I'm going with the plumber because the Goldman Sachs associate could be out of a job in 18 months because of AI. And that plumber is going to keep humming along.
Can we talk about commodities real quick? I don't even know if you have an opinion. So I'm short crude oil. Okay, I've been short for, I don't want to call it a while, probably about a little over 2 weeks. My average hold time is generally about 28 days, although that has been shrinking with current volatility to about 26 days. And I have a target. We already hit my first target, which means I reduce my risk, and I'm not going to lose money on this particular trade. Do you guys, and this is for both of you, do you have an opinion on, I don't even want to call it an argument because I really like this guy. But we have a running conversation between me and Patrick DeHaan from Gas Buddy. And he keeps touting, by the way, he is not like a liberal left. That's not how he came across to us when he was on the show. But he keeps touting how gas prices are lower because the U.S. production boom. And I keep kindly putting out more data about how we're in trouble in about 3 or 4 years. And while I'm short right now, I'm about ready to cover that and not be involved on the short side for probably the next 3 or 4 years. Do you have an opinion on the situation with the SPR, the amount of rigs, the regulations that are getting in the way of the oil that's going to come out of the ground in the U.S. in the next 3 to 5 years?
So yes, I do have a lot of opinion on that. I think that it's so, my head almost blows off when I hear people saying 0.5 million barrels, whatever, we're at production levels that were higher than we were before. Yes, but as you've said eloquently on the show many, many times, the production that we see now was because of decisions that were made 5 to 6 years ago. Yep. Yes, I think it is going to be a big deal. They did start buying back the SPR a little bit too. One thing that I've given up, I thought that there was going to be an axe to grind with the Saudis, who were going to be pissed that we depressed the price of gas by selling the SPR when there was no other reason other than political reasons. It doesn't seem like they are going to be that way. But at least it doesn't. I mean, I've heard some people who seem like they know what they're talking about who are plugged in who say that. I still think that in 3 years we are going to be absolutely screwed because our energy policy is absurd. We're blowing up the bridge before we have another bridge built to produce it, because we can't run on this fairy dust shit. But I think anyone who gives the Biden administration credit for this, I think that's just patently absurd. This is from decisions from 5 years back.
Yeah, I would tend to agree with you, Jim. I think that we sow the seeds of our decline, right, today in many ways by structurally underinvesting in just general investments in our natural resources and capacity there. I mean, we're blessed to live in a country where we even have this as an option. And so there's so many who would really kill for being in our position. What I would say is the Biden administration should be taking no credit whatsoever for the policies. In many cases, they've roadblocked so many of the stuff. They, at the same time, right, they want to take, it's correlation, but they want to take advantage and say, well, President Biden is responsible for gas prices going lower, so on and so forth. Here's my concern is the geopolitical risk premium. And it's not even about President Biden being reelected. It's actually about the wrong type of foreign policy leadership coming into the White House. If you see a Nikki Haley, if you see a Joe Biden, if you see a Chris Christie in the White House, you can say more foreign policy volatility. And that means we are in a really, really tough spot for the oil market, as opposed to someone who's far more pragmatic in terms of foreign policy. And we see that obviously what's happening in the Middle East. We see what's happening with Russia and Ukraine. And so structural underinvestment today sows the seeds of our demise. I think that electric vehicles in many ways are the future, but that has to be a transition that, one, is led by the free market and is not forced down everyone's throat. I drive an electric vehicle. I drive a Tesla. I think it's a great car. It's a great car for a whole host of reasons. But the reality is not everybody can get a Tesla tomorrow and the grid hold up. And so we have to frack. We have to use the energy that's available, and we have to be realistic about the transition.
Okay, so politically, and I know we're butting up against time here, so we're going to let you go in a second. So politically, you talked about the party before the Republicans. The last 40 years of my life have been, I've considered myself an anti-Democrat. And I even spoke at a Republican conference about a year ago, and I'm not sure this was very welcome. I said, our immediate concern is voting out Democrats. When we do that and accomplish that, I'm probably going to turn on you guys too, because I think it's a very imperfect party on the right and the Republicans. Yeah. But just the friend of my friend or the enemy of my enemy is my friend. Let's talk about Vivek Ramaswamy. I want to support him. When we had him on the show, and I thought he was fantastic. I think he says all the right things, and everything he says, I agree with. I worry that he's a wrecking ball. We're all market people. We know that change is great. Change that happens too fast dislocates, disrupts. What am I worried for? Nothing.
I think you are. I know Vivek and his family well. I've gotten the chance to travel New Hampshire, Iowa, South Carolina with him, see him up close and talk in a very detailed way about policy positions. He is the most articulate and sophisticated thinker about policy that I've seen in a very, very long time. He is actually putting credible plans out there in the public, inviting debate about different foreign policy proposals, about different economic proposals, and actually welcoming criticism. And that's a really important thing to see that you rarely see in either party. I would agree with you, Jim, that the Republican Party is a deeply broken party. There's an old Will Rogers quote, which I'll paraphrase, which is, I'm not a member of an organized party. I'm a Republican. That was originally, I'm a Democrat. Now it's, I'm a Republican. Say what you want about the Democrat Party. They stick together. And so whatever George Santos's flaws are, of which there is perhaps an infinite amount, why on earth are we kicking him out of Congress when we have such a slim majority? Why are we doing that? Lord knows if he was a Democrat, they would have kept him. And so I look at this and say the Republican Party is actually in the midst of a civil war right now. You have the Nikki Haley's of the world, the Ronna McDaniels, the country club elite, the folks who can't name 3 provinces in Ukraine, yet are content with sending $100 billion more there and potentially the sons and daughters of this great country to fight a war that is really pointless. Let's just be honest. It's a war about land. And we had actually a pretty credible negotiated settlement on the table very early on that got scuttled by the powers that be. And hundreds of thousands of people have died as a result. And then you have the America First movement. And Vivek says this, so I'll give him credit, of course, which is that America First does not belong to President Trump, does not belong to Vivek Ramaswamy. It belongs to you, Bobby, you, Jim, me, my parents, hopefully one day my children. It is a movement that wasn't born when President Trump came down the escalator in July of 2015. It was born in 1776. And so we would do very well as a country if we went back to the founding principles. What are they? Truth, merit, civility, not apologizing, putting actual credentials over identity, ending with the diversity hires, and actually putting qualified people in qualified positions. That's how this great country got set in motion nearly 250 years ago. That's how we're going to make history again, and the best is yet to come. So the Republican Party is broken. It is a vehicle for the America First movement for the time being, but this party is pretty much over if we don't nominate an America First conservative next year.
So I have to say this, Van Jones actually gave me hope for the country. We were asked a couple of weeks back on a podcast, Jim, I don't remember who it was, but somebody asked if we were positive or negative. It might have been Mike Solana, but asked if we were positive or negative on the country. And I said, I'm negative. I just am. And, you know, we'd already had Vivek on the podcast. I met you at one of his fundraisers in Florida, met you in person. We'd actually known each other, but Van Jones gave me hope. He stopped just short of calling a child of immigrants from India a Nazi. But he said that Vivek's going to outlive Donald Trump by 50 years, and that's why he's dangerous. And all of a sudden, there was so much lifted off my shoulders when I saw that. Because even if he theoretically doesn't have a chance now, I still won't say that because I do support him. He's going to be around. And as long as there's somebody like that around, we're going to see a minor experiment of these wrecking balls in Argentina. Now, again, that's like testing a vaccine on a rabbit and saying it's good for a human. I mean, it's a completely different comparison, but we're going to see a wrecking ball. We're going to watch it happen live. And it's going to be interesting to see. You know, they talk about white privilege. I actually think child of immigrant privilege is a thing. Because I'm a child of immigrants, right? And seeing what they went through and what they did and wanting no one to ever go through that, yet they still did it. I tell people all the time, my parents came here not speaking the language. I wouldn't do that. I wouldn't go to a country where I didn't speak the language for my kids who don't exist. So it's easy for me to say that. But, you know, I think that's a privilege. And having somebody in there who's been through that and who's he'll be in his 30s or 40s when he wins, and I believe he'll win, actually heals a party as damaged as the Republican Party is right now. Because all of a sudden everybody goes, you know, we did used to think that. Why don't we anymore? You know, I don't know. We've done a disservice here.
Go team at this point in time. Because I'm feeling actually good. And James, you have helped me think better today. I swear to God. Not just blowing smoke. Like you say a lot of really good and interesting things. And I think we do maybe have blue skies ahead of us if we just keep fighting the fights. Thank you so much.
Can we commit to inviting him back and spending at least 20 minutes on Incubate Debate? Because damn
straight. Yeah, we had so much to talk about, but I don't want to keep him all day.
It's
been great. Thank you so much. Tell them where they can find you on Twitter, correct? It's Jay Fishback, right?
Yep, it's J_Fishback on Twitter. And I'd love to come back and talk about what we're doing with Incubate. It's the fastest growing debate league in America. It was built because the traditional high school debate league has been totally hijacked by left-wing Marxists, quite literally left-wing Marxists, who are telling kids that if you argue that Israel has a right to defend itself, if you argue that capitalism lifts Americans out of poverty, you will lose, no questions asked. We had to do something about it. We had to blow up that system to create an alternative that is pro-American, pro-free speech, and believe it or not, pro-debate. I didn't think after debate league had to be pro-debate, but it has to be pro-debate.
And if you want more on that, we interviewed Brianna Watley, who's one of his debate students and a kick-ass kid who was awesome. Wonderful on this show. Her quote was, I was taught in debate, you're supposed to cater to the audience. You're not supposed to cater to the judges, and I will not stand for it.
Good for
what she said. Yes.
16 years old. Unbelievable, man.
Yeah, it's awesome. Thank you, James. By the way, you guys who are watching, thank you so much for watching. As always, do us a favor. Hit that Mint Mobile button. I'm not asking you to switch over to Mint Mobile. I'm just asking you as a favor to us, see what they have to offer. It helps us. They're a great sponsor for us. Thank you so much.